Good afternoon, Market Chameleons, and everyone joining for the first time. Thanks for coming by and checking out the After Hour Market Series with Ryan Mastro from OptionsRobot. Before we get started, let's take a look at the shared disclaimer. Please be aware that neither Market Chameleon, OptionsRobot, Ryan, or myself are registered investment advisors or a broker-dealer. If you're searching for investment advice, please reach out to a licensed professional. This webinar, as all our webinars and shows, are for informational purposes only concerning Market Chameleon and OptionsRobot tools and products. With that, one last look at the disclaimer, and let's welcome Ryan Mastro to the stage. How you doing, Ryan? I think you're on mute, buddy.
Sorry about that. I'm doing well.
Let me get your screen up, and there's the Market Chameleon landing page. What do you have for us today?
Well, I think the first thing we're going to talk about is what's going on in the market. And I'm just going to come over back over to OptionsRobot for 1 second, go to a chart just to kind of quickly talk about the broader market, because Friday was ugly, right? That was just, and I was down at, we were just talking about the conference, but I was down in Florida, and I wasn't getting the full scope of what was going on. But I turned around and looked at how ugly the reversal was. This is where they gapped it up. I saw it in the morning, and I had a couple classes. So we then started to sell off, and I was like, wow, I left at like 11. This thing just kept getting uglier and uglier and uglier on Friday. So, we were green going into this. Friday was ugly. And now today with the gap up, or I should say a little bit more sell off on Friday, but in terms of we gapped up today, and today was just a reversal day, right? And I want to kind of highlight one thing in here. As I was watching us throughout the day, we show something like a 5-minute, and that's not going to do it justice. So let's see, 5 minutes in here. Let's see here. So this selling right in here was very, very ugly. This was just consistent red candle. Not really giving it enough. Sorry, just trying to get this down and give you this kind of showing how aggressive this selling was. So this was a little bit of this carnage that I think you gotta be aware of, and that was Friday. And here's the carnage that basically happened today. So that selling going on, we're starting to see a pattern here that clearly there's some sellers that are starting to sell back into this market. So my concern is really what's coming out this week. Well, a couple different things, and it's really not on everybody's kind of radar. But end of the week, we're going to have Japan. And what's happening? Excuse me. What's happening with Japan is they're going to be raising their rates. We don't know to what extent. We don't know how much. The forecast is for 25 basis points. But to understand, this is the first time they've raised rates in, I think it's like 30 years. So we've been, excuse me, at a point where we've been at zero in Japan. So everyone's been borrowing money from Japan at zero and basically bringing it back to the U.S. to invest their money in the U.S. So borrow at zero, basically then collect, let's say 4% over here in the U.S., 3.5%, 4%, and you basically make your VIG. Obviously, there's some FX in there as well, but that's part of the strategy. So the idea is, okay, you can put it in bonds here, you can put it in the stock market, really try to make a much better return. But borrow at zero. I think everyone would borrow at zero if they can get their hands on it. So this is more of a bigger institutional play. Now, the estimates for this trade that has been going on for decades, since basically 1999, 1998, is something like $20 trillion. So the unwind is the risk here. So the risk is to the downside, where they'd be selling all of the positions here, the bonds here, pretty much a selling of everything, taking that money, paying back what they borrowed in Japan. So that is something I'm definitely concerned about. We saw a little bit of this unwind. I think it was like a year and a half ago, maybe 2 years ago now, something like that, whatever it was. And there was some concern there about how FX was, how maybe some of the yield was moving. But yield right now in Japan is at, I don't want to say historic levels, but like the 1 year, the 5 year, the 10 year, the 20 year are all at their highs, maybe just a little bit off of their highs right now, over the past 20 something years. So that is the problem, is that inflation is moving up, the yields are going up. But what happens is now, just like we've done in the past, from 2021 to basically up until like 3 rate cuts ago, we had our rates up at over like 4.5%, 5%. Now we're dropping our rates because we're seeing problems with the economy, with jobs, with everything else. So, and basically they're thinking that inflation is somewhat in check. The problem there is they're getting runaway inflation. Yields are starting to go up to the point they can't control them, so they have to make this adjustment.
So this is the unwinding of the carry trade, basically,
This is
or
the
potentially the start of it.
And Thursday, Friday, they're having their meeting and everyone's projecting that they're going to raise. So I think it's going to be a very big problem depending on how that unfolds. I don't know. I can't even project because I've never been in a scenario like this where we've had such a massive trade unwind. I mean, I was trading, I think you were probably trading long-term capital back in 98. I mean, we did 2000, we did 2007. These were, lack of faith in terms of the markets, right? Basically the lack of trust. Now the problem is going to be is when you get these guys get these margin calls, they starting to say, okay, well, you now have to pay this much money. How much of these guys are going to unwind right away? How much are going to saying they're going to accept a quarter, and maybe you get a quarter of this $20 trillion, but we've never faced even that much of money of an unwind. So that's what I'm a little concerned about. You start to see these extreme selling points, and they're not trying to spook the market, because you spook the market in front of this, it makes it even uglier when they do start to unwind and it becomes a free fall. So, I mean, even Tom Lee came on yesterday or this morning and said something along the lines of, we could see a 10 to 15% drop in the beginning of January. So the problem is, just to kind of come back to the bigger picture of, kind of where we've been. And, let me just kind of zoom out. Let me actually just do this, go to like a weekly chart to put this more into perspective and zoom out so you can get a little more context. So, I mean, if you think about the bull run that we've had and how long we've been in here, go back to our last big recession, which was 2009, right? 2008, 2007, 2009 to 10, right? So all right in there. And how much we've come from there. Yeah, we had a pullback here in 2022. It was a lousy year, but was it a 50% pullback? Was it an 80% pullback like we had in 2000 or 2009? Now, I'm not calling for that, and I'm praying that it's not, because that would mean some very ugly moves here, probably retesting levels like back down in here, right? From 600 to retesting a low back in there of 400. That's a 200 point drop. That's a 30% drop. It's definitely doable, right? That would mean, or even like a 2022, where you pulled back and you went from something like 415 to 262, coming down and tested 200. So for us to come back and test at 200, you just got to be aware of what's going on in the broader market and how to watch some of this stuff. So I think some of the things that we want to kind of look at today is, what's moving, where is there some, let's say, maybe potential slippage. So let's go back over here and look at some of these stocks. Now, Costco, right off the top, you guys have it listed. It was an ugly looking day in there. And, let me just do this. Right click, go over here, OptionsRobot, and do charts. So this will pull up the chart right now in OptionsRobot for Costco. And you can see this is just downright ugly, right? They had their earnings, they're done and out of the way, but the big picture, their run is over. We're now in a downtrend. So we've been consistently in a downtrend for the better part of since May, right? We topped out in May, almost a double top right there, falling off, taking out lows now, taking out the 100-day. So this is the weekly. Sorry, I apologize. Go back to the daily so you see a little bit better. Same picture, just a little bit more, granularity in that. But this definitely looks like, okay, we start to retest and start to drop. You start to come back down and test bigger picture. So we were looking at a big put butterfly in here earlier today. There's some potential there. So that could be something that you want to look at, just because it's a little bit more expensive, a little bit more volatile. I was looking for support back in here, kind of around, what's that number? Let's zoom in on that. Something like that low there is about 822 from, we're trading about 860. Could you look at something like the low back in here? That's going to be, I think we're already right at it or through it. So, you're looking somewhere in this range that this thing could fall pretty heavily, pretty quickly. So I'd be very cautious with this, because it can move around pretty dramatically. So coming back over to, again, McDonald's, IWM, these are just headlines. Tesla was a really good stock today. So you come back over into OptionsRobot, we'll drop in Tesla. It takes a little time to type all the stuff in Tesla. So Tesla, was off to the races here. I think you're going to retest the highs from way back here. That high is like 488.50. So if we can kind of get through there, today's high was 481.73. So maybe you want to retest that. They get through there, great. I know there's been extreme unusual call buying here for the past 3 weeks. So coming back into the UOA of what you guys offer here in terms of looking for the unusual volume. Tesla's been on this list almost every week with sizable trades that have been just pushing and pushing and pushing this thing up. So, Netflix is one I keep on my radar as well. We've been kind of flatlining in here. And when you look at the chart on that, it definitely looks like it's got to get the news out of the way, right? So we got to clear the news. It basically is making a higher low at the moment. Get rid of this volume for you. It's making a higher low, but it's still a red candle because of the market. So we need to see some positivity out of this, maybe take out some of these highs. That could definitely be on my radar in terms of positions. But let's come back and try to find some ideas. So let's come back in, maybe let's do just a regular screener on this, do the stocks, and come back in and kind of filter through some of these bigger names. So, Apple, it was down 4 today, so that was a pretty ugly drop. Am I overly concerned with Apple? No. Apple tends to be one of those stocks when the market starts to fall, that tends to kind of stay up relative strength-wise, so I probably wouldn't touch that one. Amazon on my radar, right? I would definitely be looking at Amazon and looking at that. So if I bring that over as just to show you in a bigger chart on OptionsRobot, if you look at this, you see the potential downside. I think you can all see kind of this head and shoulders pattern where maybe you look at this as a shoulder, the head, and then the shoulder. If this completes down, maybe down below the 200-day, this could get very, very ugly. I don't mind the company. I think it's actually done a very good job, but clearly they are selling back into this thing. So I think, even taking out today's low. So let's put just a quick trade in on this as an entry bot to the downside, just to give you an example of what you can do. So I'm going to say less than. Once, especially in OptionsRobot, what you do, if you put in less than, it's going to know you're looking for a put. Today's low, let me just find that for you real quick. So let me put this to 1 day and go to my bar charts, and I can see what today's low was. Today's low was 221.84. So if I say something 221.84, we get down below there. I want to add an options, automatically going to know that I'm in a put. I would select looks like the closest one is the 225s. So I'll probably select the slightly in the monies on that. I'll do a quick here, and the quick is just a price slice so that it works my way up without me having to go in to adjust it. So I'll do like 3 price slices. I want to start probably at the mid. So I'm going to go in to buy the option. I want to basically price slice my way to the offer. So it's going to work my way up, trying to get me the better price on that. So that'll create a entry bot for me. Now, the advantage of using a OptionsRobot is that you can then create the templates after that really quickly. So depending on what I think it's going to drop, do I want to go by the stock price, the option price? I usually don't use delta as much, but you could say if the option were to drop by $2, then I would want to consider a roll. So again, the stock moves about, on my other screen here, stock moves about $6 a day, 550, right? So here's what this is going to do for us. It's going to basically say if it drops by $2. Now, you may want to put stops in this. If you do, then say you can pick a whole nother selection. So I'll just cancel all of that and say I want to select one that has, let's say 2%. Maybe this one's got, I think this has got stops in it as well. So nope, it doesn't. So I thought I had one in here that had built-in stops. Let me cancel those. Cancel does, let's see, create. This may have some stops, but not all of them. Let's see what this has got. So this has got some stops in here. So basically it's giving me 20% and 20%. If it runs out by 20%, I'm going to roll down into this box, and then it keeps doing it in terms of different numbers, work my way through, and this does it 4 times. So this is based off of the option gain since inception. This is based off of, if I lose from my acquisition price. So it will, if it drops, I want to exit my trade. That's my stop. So I have this built in. Now I just created a 1, 2, 3, 4, 5 different trades. Let's see, right? That's all I got now. So I got a little more. 1, 2, 3, 4, 5, 6, 7 trades that I put in with one click, right? So just using that template saved me a huge amount of time, especially you get comfortable with it and you know which one you want to use. You can drop your template in there right away. So that gives me the ability to jump into an Amazon first thing tomorrow morning once this volume or once the stock drops below 221.84. So coming back to Market Chameleon, and come on, there we go. A couple other names that were jumping out at me that have been pretty hot. And we already talked about Costco. We talked about Netflix. The banks have been on fire, but we started to see a pullback on those, right? Actually Bank of America was one that I thought looked probably the best out of the group. So when you look at that on a chart, it's probably one of the only ones that continued to made a higher high today. So Bank of America could be on the radar if you think banks are going to continue to be strong. I think the Japan carry trade could wreck all of this, right? Especially a lot of these banks that are become liable for some debt could get into trouble there. So I'm going to shy away from something like that. AMD, any of these chips, Marvell, let's just kind of cover a couple of those on the charts here. So AMD, I think, is a good stock, but obviously going to fall into the trap if it starts to fall with a gap. So that could be on your radar. I like Marvell as well, MRVL. I think this is sitting precariously on a spot. You got two kind of good lows right here trading against those. That could easily fall down to the 100. Another one that was on my radar for those was ARM. So any of the chips, this one looks even more precarious because you've now taken out the low here. So something like this, I would probably look at as an entry bot as well. So doing an entry bot there. And 124.38 is the low. All right, come on. This is my system being slow. So not OptionsRobot. This is, I think, my computer because I got too much crap open. So ARM, come on. I have to shut some stuff down here. There we go. I'm going to shut this hog of a system. I got another trading platform off to my left. I'm using this one here as my main, but come on. All right, well, let's close this, cancel this out. Maybe that'll free us up there and do it again. Let's do a entry bot here, entry bot. There we go. And do less than and 124. I think I saw the 122.80 was the low. A little further away. Come on, I typed it in. Sorry, this is my RAM. I think that's slowing me down. Hopefully I may be frozen over here too. Am I frozen with you guys, Will? Oh, there we go. Am I freezing with you?
Ryan, you're good right now.
Okay. Yeah, I apologize. I'm not sure. My RAM or my internet looks like it was freezing things up there. So on something like this, I'd be adding an option. I'd be adding probably a slightly out of the money at this point. We're looking at the 122 strike, and I would do probably a quick on this, create, and then again from that bot perspective, how do you want to roll? What do you want to roll? This one's a little bit more, a little bit bigger in terms of what it can move. I'll still use this one with all the stops built into it. So again, at an instance, you can basically get a template and all these orders put in from to preview that again. This is what it looks like. So it basically gets me into trades, rolls me down with stops built in. So again, it creates that forced discipline, which a lot of people don't have and need to kind of stay in and be able to trade and go from there. Now, Will, I apologize. I don't know if we're going in and out, but is there any questions? I know this is something I've been encouraging. Get some Q&A in here. And
yep, we did have some questions pop in from YouTube from Jim. He was asking about a couple different stocks. Can I give them to you?
Sure.
First one is STX.
So this is a space that I think you have to be very, very careful of. There's a lot of discussions from MU and Samsung that are going to be getting rid of some of their memory to retail. So this could be something where you're looking for some of these replacements from a WDC, a Seagate, or a SanDisk. So STX, it may fall, right? But I think this could be one, given the trend that you have, could be one. This is on a weekly chart. Let me go back to a daily here real quick. This could be one that you want to jump on or slowly start to build a position if it does fall with this market. So I think this between MU, Samsung, WDC, but I'd be careful with MU. They're going to have earnings on Wednesday. So WDC looks very similar, and SanDisk, we had actually looked at it as a downside trade today. We made a little bit of money on that, but nothing, nothing substantial. Breaking the 50, that orange line could be very ugly. But MU, be careful Wednesday. That's going to have earnings. That was down a little bit today. And then Samsung is the other one I'd be very cautious of in there. I don't remember the exact symbol. It's like SAMS or something like that, but I don't remember the symbol in that one. So yeah, I don't mind the STX. I'd want to see a little more bullishness. If you're in it, maybe consider a roll of something out of the money and sell. But I think you can add, maybe not right away, maybe bigger breaks like the 50-day or this one, or you feel like you start to see a rounding bottom, you want to add to the position and maybe build something bigger. Because I think STX, WDC, SanDisk, I think they're all going to be pretty much bullish for next year in general.
All right. Next one is from Hallery, DocuSign, DOCU.
This has been a dog. It hasn't done much at all. We used to trade this as a high flyer back in the day. I mean, it used to move around decent. This has been a big Kathy Wood name. I don't know how much she still holds it. So this is kind of one of those ones that I think you could probably trade in the trend. It's slightly to the downside, somewhat kind of sideways here. I'd be very cautious, though, if it starts to break the bigger low here. Like if you were to zoom in on this and just kind of blow this up a little bit so you can see this a little better. And, I'd be cautious of definitely if I'm not in any kind of positions at all here, especially if it takes out the low. So that's like 63.50 as a stop. Could even be traded for down to there. Trading around 68 right now, maybe take out the low and trade for these lows back here with a bigger break if you're trying to play it to the downside. So I don't mind it to the downside. To the upside, I'd probably have to see a little bit more. I'd have to see maybe through the high of Friday. That was 69.61. So then maybe, again, maybe the market turning back up, everything's awesome. Japan's all good. And, we don't blow up in terms of the carry trade. Then, yeah, I think the market could start to go nuts. Keep in mind, the Fed is supplying liquidity right now. They're doing reverse repos. Banks are getting cash out. They're dumping their crap onto the Fed, and they're happily buying it. So that should be a positive. We shouldn't be having these negatives right now. So that should be moving the markets higher versus this carry trades. I think everyone's just really nervous about the carry trade at the moment.
All right. Next one is back to Jim. It was Uber.
Uber was crap today. I was watching this. I saw this early. We had it in one of our services. And, yeah, it just looked really, really ugly with a gap down. I don't like the close. So, basically, and everyone may do a little bit differently, but the way I look at candles and kind of the chart, if you're down, you're closing near the low, that's one I'm typically going to be looking at, maybe potentially holding overnight, because typically the follow through will be unchanged to even making a lower low, like a gap down. So something like Friday maybe wasn't the worst day because you were right at the top end of the prior day's green candle, right? You had a reversal, so that's fine. But here's the follow through, now taking out critical levels, closing at the lowest low of the past, since July back in here, maybe even lower than that, right? You're back in since May was the last time we really had a candle that was substantially closed down there. So this looks very, very ugly. And again, I think that came back from the multiples. There's a report that came out from someone talking about Tesla's numbers, saying that they're going to keep their charge per mile down compared to like an Uber. Now, I don't think they're anywhere near what a Waymo is yet. And I don't think Waymo is anywhere near what an Uber is or a Lyft. So Lyft is already doing deals with Waymo to kind of get their network and their flow. I saw a Waymo down in Florida, and I was like, holy crap, that's crazy. I don't think I could do it with nobody driving. Like that would I think would me out. But No one's sitting in the driver's seat, just the car moving around, just crazy. But they have all these little whirly things on it. Was pretty cool. I got to admit that. But Uber, from that perspective, I definitely could say that could be a downside trade, right? That could be one. Take out the low levels for you on something like that. I'd probably be looking at something like a 79.50, then probably something like a 78.05. Then you're going to get a little support right in there on some of those opens, right? That's about 70 cents. So that actually, unfortunately, it's about every buck. But those are areas where maybe you want to consider a roll, basically take some of your profits off the table.
All right. We have about 4 minutes. DocuSign. Oh, we did DocuSign. No, it wasn't. It was PAAS.
So you're talking about silver, Pan American Silver. So I have been following silver for a long time now. Well, long time for me. I've been in silver since I would say probably middle of the summer when we really start to get excited about silver and the potential as stocks were starting to climb here, taking out highs. So PAS has really done a phenomenal job of climbing up, basically staying correlated with the price of silver. I think silver is going to continue to be hot, right? You look at what's going on in China. They haven't fully stopped the flow of silver out of the country yet. They are going to stop exporting or allowing it to be exporting. So that's one big thing. COMEX is getting a lot of people that are standing for delivery. What that means is that guys that are trading the futures, they can basically just roll their options or roll their futures out so they don't take the delivery, or they can stand for it. They're basically saying that I want to take delivery. And over the past, I guess, 2 cycles, we haven't had anybody, well, I should say we've had 1 or 2 major guys stand. Now there's 3 that are saying they're standing for major deliveries, which is something like 20% of the COMEX's total volume in terms of their vault. So that's one. 2, London's having some issues with their deliverabilities. But Singapore, not only did JP Morgan move their entire desk to Singapore, but there's a massive, when I say massive, I think it's one of the largest deliveries ever of silver is going to happen in Singapore towards the end of this month. So taking all that liquidity off is a very big deal. And I think people are starting to get to that point where they're kind of front running silver, knowing that it's going to continue to go up. So we've seen reports that silver producers, silver guys that are dealing with silver in terms of making jewelry and all that are buying bulk now, trying to buy more and more because they know the price is going to continue to go up. So I would stay long it. I wouldn't do anything. I would probably roll my options up if I'm in options. If I'm in stocks, then I would probably start to maybe even sell something against it. Implied volatility is going up against it a little bit, but again, you want to be able to roll those options up and out as they get up to that short stock price. So I would still be long silver. I'd actually be looking to add. I'd actually be looking to add some of the smaller minor names. So like something that is like a CDE or even smaller than that. Mainly for the reason that I think at some point these companies are all getting larger margins. There's going to be a lot of mergers and acquisitions that I think are going to go on, given that there needs to be better efficiencies and better, I think a lot of companies are going to have people come in and buy their product or buy into the company so they can acquire a portion of their product. So I think that's going to start to happen as I should say, the liquidity of the amount of silver that's produced gets reduced. And that's what's going to go on here in the next year or so.
All right. That puts us right up against the hour. We have one more symbols popped up. Do you want to get to it, or we got a minute left?
I'm good.
ABBV.
So AbbVie, I haven't looked at AbbVie today. AbbVie, ABBV. Let's see what we got. Doesn't look bad. This could be maybe a little bit more of a flight to safety, kind of a company that makes money, right? In terms of maybe not as much tech, maybe it's not as tech heavy, maybe not as much risk for maybe the Japan carry trade. So you're going to start to see that. I like that it got to the 50-day targets for me. If you're in it, maybe use the high, get back up to something like the highs back in here. I'd probably look at something like, let's see if I can do this real quick. Something like a level like that. That's about 230, 210. And then maybe the closes up there become a good level as well. I actually like that level a lot. So that one right there, you got to close over here, the close and the open right in there. And then you're going to be testing the highs up in there. So this high is about 236 on that. So again, those are a couple levels for you. Hopefully that helps.
Yeah, that was great, Ryan. Thanks again for bringing this webinar to us, Ryan. Any last words about Options Robot you want to leave with the Chameleon community?
No, let's do a coupon, right? I know not too many are jumping on it, but again, I'm going to put it out there. Come over and try it out. Give us a take the 14-day trial. Let's think of what's a good coupon right now.
I
Let's
think you
do
did Jingle last week.
Jingle. Okay, let's do Jingle. Let's keep it. So let's keep Jingle.
All right, guys.
So we'll keep that one, and we'll do a discount for anybody who wants to try it.
All right, give it a try, people. Everyone, thank you so much, Ryan. We'll see you next week, buddy.
Sounds good. Thank you. Take care.
Hey, everyone. Thanks for joining another Market Chameleon Option Robot series. If you're following us on any of the social platforms, thumbs up, like, comment. If you're interested in Ryan's product mix, you can always email him. Actually, let me see if Ryan's back on. Ryan, how do they get in touch with you if they want to have if they have any questions?
OptionsRobot.
Ryan at
OptionsRobot.com.
Ryan at OptionsRobot.com. Thanks again, buddy. All right, everyone. Have a great evening. We are live tomorrow morning, Dimitri and I, at 9 a.m. Come by and check out that live webinar series. Everyone have a great evening, and we will see you tomorrow morning, hopefully, and we'll see Ryan hopefully next Monday. Bye-bye.